So what we're dealing with right now is a massive overall economic trend reversal, which is happening at a time when we've got unbelievable amounts of indecision among investors, which is only now showing signs that it's begun. And when you say signs, what do you mean, Peter? Well, I don't know. Let's talk about this. A massive deleveraging, which is going to spike auto loan delinquencies, which you've already seen starting. It'll get worse. Unpaid credit card bills, increases in the economy-related homelessness. Spiking debt levels for the government, for you, for your neighbor, the company you work at, the state you live in. Government shutdowns and the suspension of the debt ceiling. A bunch of delusional stuff because we can't admit that we don't have the money to pay for the stuff we've already bought. You're going to have longer lines at the food bank. You're going to have corporate defaults at record levels. You're going to have bankruptcies rising fast as they already are. And this is at a time when most families don't even have $500 for an emergency. You've heard all the stats. You've heard all the reports. People are struggling right now, which is why I'm going to tell you what you can do about all this, because this is serious. It's very important that you make the right decisions today about this. There's things you can do so that you avoid all the detriments of everything I'm talking about right now. Once we've fully pivoted, there's going to be dropping stock market prices, margin calls, dropping real estate prices, falling Bitcoin prices, decreases in your quality of life, bankruptcies, defaults, rising sin industries such as alcohol, gambling, drugs, and even greater financial hardship by far than you're experiencing right now. People are already having financial hardships. It's not news you want to hear, but some of you want to benefit from what I'm telling you, understand what's happening so that you can land on your feet and make the best moves for you and the ones that you love. But what happens when the recession starts? Historically, that's when unemployment really starts to get going higher. Right now, there's a lot of layoffs that haven't been fully absorbed into the numbers yet. There's more to come, but the majority of layoffs will happen once the recession starts, and that's going to spike the unemployment rate over 5% for sure. But I predict it'll hit double digits in not too long of a time. And as this economic pivot plays out, that's when everyone goes from greed to fear. And you understand that FOMO can drive things higher and even higher and even higher. But there's reverse FOMO where when you know that stocks are coming down, you might want to buy the stock, you might have great expectations for where the stock's going to go, that the company's doing really well. But at that point, you'll know that if you wait a week, the price will be even lower. If you wait 2 weeks, it'll be even lower than that. And all of a sudden, everyone just puckers up, everyone stops buying, and that just exacerbates the negative FOMO. At that time, when the fear starts to show up again, that's when everybody goes risk off. You start looking at things like precious metals, real money, or you get U.S. Treasury bonds, or you get out of the really high-flying Magnificent Seven stocks and all the other ones do, like I've been telling you to do for quite a while. In that risk-off trade, that's where things start to happen, such as the reversal of the wealth effect, which is right now more extreme than it could possibly ever have been ever. The wealth effect is not a real thing. It's like stress or guilt or borders or the debt ceiling. It doesn't actually exist. You're just told that it exists, but it's not really a thing. So when everybody goes risk off, that's when things like stock markets start to come down. And then if that gets to a point where you have margin calls, forced selling, that can really exacerbate the downside. And you've heard a lot of people, if you're watching any kind of financial stuff, some people say the market doesn't have corrections anymore because they're delusional. And then other people say, well, we're going to have an 85% downside. And I just always say that it doesn't matter if we go down 50%, 85%, or not at all. What's most important is that you protect yourself, you land on your feet, you get in a better situation in place no matter what happens. No matter who the president is, no matter what happens in politics, as long as you're paying attention, you'll know the information you need to know to make the decisions you need to make. And hopefully I can help you with some of this. And maybe you don't agree with everything I say, and I really hope you don't. I'm wrong plenty of the time. But I'm generally correct about things about the economy almost always. It just takes longer. That's why I always say to you guys, what Peter Leeds says, just wait. Oh, you said gold's going so much higher and it only went up to $1,900? That's what I tell you. I go, just wait. We're not done yet. Just wait. Are we done yet with gold prices, for example? Not even close. But the point is, once stocks crash, or barring a crash, they start to correct. What that does is it hurts the wealth effect, which also plays into real estate, which will start bringing real estate values down finally. But if you look at this chart, and I'm going to tell you this again, what apparently is clearly obvious that most people don't understand, including economists for some reason, which blows my mind, the recession will start typically. The gray areas on this chart are recessions, the line is the interest rate, and when interest rates start to fall, the recession typically begins then. Like here and here and here and here and here. That's why I'm saying that history would have to break for this not to continue. When the recession starts, it's because interest rates start to lower. And you can argue why that may be, but often the argument is that if rates are lowering, it's because they know there's a problem with the economy, so you're already going towards recession, which, yes, is the exact case that we're in right now.